Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to the Daybreak Asia podcast. I'm Doug Krisner. Equity markets in the APAC region are higher today after a rally in U.S. stocks. We saw plenty of positivity stateside to what appears to be an end to the U.S. government shutdown. And in a moment, we'll check in on the U.S. side of things with Chuck Camello of Essex Financial. We begin in Australia, where the UBS Australasia Conference is underway. And it's there we caught up with Kurt Campbell. He is co-founder and chairman of the Asia Group. He's also a former U.S. Deputy Secretary of State. Campbell spoke with Bloomberg's Paul Allen, and they began the discussion by looking at the prospects of a trade deal between the U.S. and India.
We heard some remarks from President Trump saying, they don't love me at the moment, but they'll love me again. Given the difficulties, the tension in this relationship, do you see any lasting damage that's been done?
Well, it's a very important question. After the election last year, I would say the government that I worked with that was most confident that they could manage President Trump, given the first term successes, was India. And of course, what we've seen in recent months is really a whole-scale collapse in relations at the highest levels, lots of tension, and very little communication between President Trump and Prime Minister Modi. I think some misunderstandings about who gets nominated for a Nobel Prize and some of the issues associated with the U.S. role and what went on between the fighting between India and Pakistan earlier in the year. But let's put that aside now. It's clear that both countries want to try to rebuild relations. Each leader is sensitive about how to do that, but in the background, trade negotiators have really hammered out what I think is a very substantial trade agreement between India and the United States that will take tariffs down from almost 40% to I think a livable range, and you'll see substantial areas where India's markets will open to further cooperation with American tech firms, manufacturing, and the like. So I'm optimistic about this. I would simply say that the most important element of our Indo-Pacific strategy is a strong and growing relationship with India. I was very troubled that relations had fallen to such a low level. Your important question really is, will there be lasting damage? And the honest answer is probably some, but we'll just have to see how deep that is.
Well, I know it's an appealing idea to set aside the India-Pakistan conflict, but at the same time, President Trump is also trying to nurture a relationship with Pakistan, inviting an army chief to visit the White House as well. So how to balance that relationship?
Well, look, I would say almost all our strategic interests lie with India, and I think our engagement with Pakistan is substantially different and much less significant since the Cold War and the period thereafter.
But nurturing that relationship does risk alienating India, correct?
It does, and it is also the case, and I think we just have to be honest about this, Paul. Really, it is Pakistan that is more, shall we say, effectively engaged the Trump family with a variety of engagements on cryptocurrency and resorts and the like. But still, the most important relationship for us is India. We should not just tilt towards India, we should fundamentally embrace India.
And of course, in the background is China. All this geopolitical positioning has China firmly in mind. Do you see a new Cold War-style narrative beginning to emerge in South Asia?
I don't know if it's a Cold War-style narrative, but I would simply say that for U.S. strategy, a close relationship with India is absolutely essential. I think increasingly you see China's support for Pakistan, which is really of central significance, military and nuclear support, and that is a subject of real concern for Indian interlocutors. I think the real issue is this enduring relationship with Russia that causes problems with the United States. India tends to be loyal to countries that have stood with it for decades, but at the same time, I think behind the scenes, India knows and understands that this horrible conflict in Ukraine has alienated Russia from most countries across the world, and frankly, India has to be more responsible about that relationship.
I want to talk a little bit about the US-China relationship
Yes.
as well, because I do wonder what you make of China's pushback against the US, whether China had a stronger hand than perhaps President Trump anticipated, and has the balance of power between the two countries shifted a little?
Well, look, I will simply say this. At the beginning of the first term, Paul, no country was thrown off balance more than China. They anticipated a different electoral outcome. That's not the case for this second term. They come in with a plan. They're very strategic about how they are engaging the United States and President Trump. You'll note President Xi, senior interlocutors in China, treat President Trump with great personal respect, but at the same time, every step that the United States has taken with respect to tariffs or sanctions or any step against Chinese firms or practices, China responds immediately. And their responses tend to be highly, carefully designed for specific damage or signaling for the United States. And for instance, rare magnets were a shot across our bow, making clear the vulnerabilities in key areas of technology. China is prepared to match us step for step, and it is also the case that China is stepping up in a variety of vectors, building closer relations with a number of countries. Just a few years ago, they were busy alienating countries like Australia, Japan, South Korea, and India. Now they are again on a kind of modest charm offensive, and they realize that much of what President Trump has done has been disruptive to traditional relations. They see an opportunity, they're trying to seize it. Now, hopefully, the, I think, relatively positive trip of President Trump to the Indo-Pacific, good stops in Japan and Malaysia and South Korea, and at least initial engagements with China were somewhat reassuring to Indo-Pacific partners, and the hope will be we'll be able to build on that into the future. But I think it is undeniable that in terms of the great game, China has made some important steps and has some advantages.
I just want to end on some of your thoughts about how supply chains have been reorganized as well, and particularly for the Bloomberg audience. What do you see this meaning in terms of capital allocation, location of manufacturing hubs, etc.?
Well, look, I will say this, Paul. You know, there's obviously a lot of talk about, you know, in each of the stops that the president made, first with the visit of Prime Minister Albanese to the United States, but also Malaysia, Japan, and South Korea. The president signed critical minerals deals. He's launched on a major program in the United States that will look at new investments in areas of refinement, also looking at recycling for some of these capabilities. The truth of the matter is that if you look at, you know, the vast majority of rare earths and critical minerals, of the 90 or so that are important to industrial and technological pursuits, China has an overriding advantage and dominance, both in terms of supply and refinement. And it will take years, if not decades, for the United States and partners to match that. And so this is a vulnerability that has been built up over years, and it will take years to resolve. I'm grateful that the United States, working with Australia, has committed to attack this problem, but it will take time, resources, and substantial commitment, not just this administration, but next administrations.
Just very quickly, we've only got a few seconds left, but since you're here in Australia, I wondered if you could get a score for Anthony Albanese and the way he's balancing the relationship with China, the largest trading partner, the US, such an important ally. Just a quick score and a comment.
Look, the truth is, it's hard for Australians to hear positive news. They immediately tend to dismiss it or think, oh, someone's exaggerating. I think Prime Minister Albanese handled himself extraordinarily well in his visit to Washington. He walked that fine line. He has challenges at home in terms of a population that's skeptical of President Trump, but also a country that wants a close relationship over the truncheon with Washington. He secured AUKUS, a variety of areas of common purpose, critical minerals, technology, AI. I thought it was a very good meeting, and it keeps U.S.-Australian relations on a positive trajectory.
That is Kurt Campbell, co-founder and chairman of the Asia Group, speaking earlier with Bloomberg TV host Paul Allen at the UBS Australasia Conference. Welcome back to the Daybreak Asia podcast. I'm Doug Krisner. Stateside, it appears we're nearing an end to the U.S. government shutdown. On Sunday evening, 8 senators in the Democratic caucus broke with the party to vote with Republicans and advance legislation to end the shutdown. And now, the Senate is taking a series of votes on a package to fund the government. This will lead up to final passage of the bill. Now, the legislation would still need to clear the House of Representatives before the government will be able to reopen. Nonetheless, markets took these developments as a breakthrough, since ending the shutdown would remove a major growth headwind and a lot of uncertainty over the outlook. For a closer look now at where things stand, I'm joined by Chuck Camillo. He is president and CEO of Essex Financial. Chuck joins from Connecticut. Thank you so much, sir, for making time to chat with me. Can we focus on this rally that we had in the chip complex today? I think the semis have become this proxy for the AI trade, and the Philadelphia Semiconductor Index was up 3% today. With that, though, volatility came crashing back down. I know we typically don't use percentages when we track the VIX, but today the index fell 7.8%. The VIX is sitting right around 17.6. Is everything fine in the equity market so long as AI is fine?
Well, I think AI is a very, very big theme, but it certainly isn't everything, right? So if you look at what drove the market down last week, right? So last week we had NASDAQ down 3%. Today, Monday, 2 days later, 3 days later, it's up 2%. So AI is a big part of it, which is driving the market, especially with all the capital expenditures and any concerns that might sort of upset that. But there's bigger macro themes at play here. I mean, big driver today of the market was the positive news on the government reopening. That was a big uncertainty hanging over the market. And it was, again, you start messing with people's vacations and airplanes and things of that nature, it starts to get more attention. That was a big one. And, you just got the more positive news and sort of an OpenAI statement last week about the government maybe coming in. I mean, they walked that back. So I think you had a couple of big blankets come off the market today, and you saw a nice rally.
So I get the fact that there is optimism today with the fact that we're likely to have an end to the government shutdown. That removes a growth headwind, which in and of itself seems to argue for at least stable interest rates. But one of the things that's striking is when you look at the equity market, this knee-jerk response is to go right away to the riskier corner of the market.
Well, I think that's where people think the growth is, and that's where they can, try to make the most money in the market. But that opportunity comes with a much, much higher risk. And we're living and watching that in real time. When you start talking about AI and we start talking about the riskiest parts of the market, we're talking about tech, we're talking about cutting edge tech. For the most part, right, you're also talking about big companies, with really good profit margins and making a ton of money. And you certainly still have the startup side of that. But we're in this potentially transformative stage of again, you've heard AI called the next industrial revolution, and it is just ripe for tremendous amounts of volatility. And again, this market's been on edge, so it doesn't take much to move it one way or the other. And honestly, we're living that. If you think back to all of 2025 so far, we've seen a tremendous amount of volatility. And look, I just look back to last week, what the market did last week versus what it did today, and who the heck knows what will be by Friday of this week. But it will certainly be bouncing around a lot. So
I'm curious, Chuck, do you want to de-risk a bit on a day like today when the direction of the market is expressing so much positivity?
Well, I think the whole concept of de-risking, which quite candidly is a conversation we're having with more and more clients, given this really strong run of the market, 23, 24, and now to 25. And listen, there's nothing wrong with trimming some winners. Like we've seemed to have gotten away from that, but there's nothing wrong with looking at each of our clients and reminding them of what their risk tolerance is, what their overall asset allocation should be. And the challenge is like tech now makes up like 30 some odd percent of the S&P 500, right? So if you've done nothing, you've become undiversified, and, taking a little bit off money off the table is not a bad idea. Now, we're not doing that based upon Friday the market did this and today the market's up. I mean, if you look at the trend, obviously, that correction last week was off of a very high level. So, we sort of got to put it in perspective. But we do think that long-term trend is bullish. And then again, when you start to talk about de-risking, well, it's like, essentially, are you just moving equities from one bucket to another? Are you taking it from growth to value? Or are you moving more to fixed income to really give you some diversification? But those are the types of conversations we're having with clients every day.
So ending the shutdown obviously means a return of economic data. That's been sorely lacking. It will also help maybe give the markets a little bit of insight into what the Fed may do next. Where are you right now in terms of the Fed outlook?
Well, I think it's, the most recent pronouncement we had, Chair Powell saying that he was driving in a fog, right? So hopefully that fog lifts a little bit with some data that comes back out. But the data itself has sort of been all over the place. So, I mean, not to hedge it, but the labor market, I think, is really what's going to drive what the Fed does in December. And if you get, I think labor at best is muddled. And if we get some really weak employment reports, then I think the Fed will cut. Inflation seems to be, muted / sort of anchored right now. So I really think it's going to be, it's going to be labor and the employment reports that will drive what the Fed does in December. And honestly, you've gotten sort of conflicting data on that. So I don't want to call it 50-50, but I think you're darn close at this point.
So you were talking a moment ago about diversification, maybe into the fixed income space. Are there opportunities that you want to share right now in terms of maybe it's the corporate segment of the bond market? Maybe you're looking at U.S. Treasuries. How are you playing fixed income?
Yeah, well, bonds are behaving like bonds. I mean, so, you've got your average intermediate core investment grade bond fund or bond ETF is up about 7% year to date. And in an environment where the Fed, is going to be being more accommodative, that generally is a rosy picture for fixed income. And you've seen that. And again, you're seeing people that have been in treasuries for a while, and really they probably would have been better off in the past couple of years in either, ultra short or intermediate term bond funds. So we do think there's opportunity there. Mortgage-backed securities, right now, based on some conversation we had with a really solid PM, seems to provide an opportunity. And, we diversify. We diversify with credit quality and we diversify with duration. But, that part of someone's portfolio is really doing darn well so far this year.
Are you fully invested right now, or maybe you're sitting on a little bit of dry powder? Which is it?
Well, as a firm, that question really is more driven towards, where are our clients sitting, right? So as a firm, we're not really investing firm capital. But what I can tell you is there is still a fair amount of cash sitting on the sidelines. Now, what direction that's going, right? So money markets right now are 3.7, 3.8% down from 4 and change. So that the Fed keeps cutting. We know which direction that is going to go. But we generally have a plan for clients to get them invested. So one of the challenges, quite candidly, right now is getting new money to work, given these elevated levels of the market and elevated levels of PEs. So sort of using dollar cost averaging, legging into the market. Or if you've got a solid plan and all of a sudden the market drops, you get a real volatile week, maybe accelerate that plan a little bit. But it is interesting because, we see politics and people's political leanings really drive a lot of their thoughts about whether this is a good market, bad market, a wonderful time, the end of days. So it's really an interesting conversation depending upon which ways someone is leaning politically.
So if you're expecting more volatility in big cap tech, do you necessarily think that we may be on the verge of a pullback that would then give you an opportunity to jump back in?
Well, look, we just saw one, right? And 2/3 of it got taken back in a day today. So I think nobody would be surprised, given that sort of how, it almost feels like this market is a rubber band that's, especially tech, large growth, is a rubber band that's been pulled very tight. And any little thing can sort of snap it or cause it to snap back. So I don't think anybody would be shocked or surprised take out of the picture like a geopolitical event or something like that. Let's just sort of stay with the financial markets. Who knows? You get some new government data and all of a sudden employment's really strong and it doesn't look like the Fed's going to cut rates and that might upset the markets. it's going to be an opportunity. So, I mean, we have been trying and have for a couple of years now, if not many, many years, trying to set the right expectations with client to expect that volatility. Good Lord, look at what happened back in April, right? And use that to your advantage and realize that it's the normal functioning of a market. But for the folks that have money in cash, and if you think back to April when NVIDIA was trading below 100 and it got up to 200, now it's at, I don't know where it closed today, 180 something, I'm guessing. The market will give you an opportunity, and you just have to have the discipline and, quite candidly, sometimes the intestinal fortitude to stick it out and put money into the market when psychologically and emotionally it feels like the worst time to put money in the market.
So, Chuck, what is your view on the use of leverage? Give me your philosophy in applying leverage to a trade.
We're generally not fans. I think you generally will understand the bite of leverage. You won't appreciate it many times on the upside, but good Lord, when it works against you, you will feel every ounce of it. And really, I think leverage certainly does have a role with certain different types of investment strategies, but you really need to make sure that because again, you're levering up the risk in the hopes of a greater return. And so, you just got to be really careful with it. So for the average client, it's not something where, we recommend. For more sophisticated clients, if it's an interval fund or a private investment that uses leverage, and the clients are more sophisticated in nature and understand the risks and the returns of it, then certainly we do invest in certain things like that. But by and large, for the average investor, the leverage, you don't really ever appreciate the full upside of it, but boy, when it moves against you, you feel it. And a lot of bad market stories start with, oh, they were highly levered. And those stories generally don't end well.
You're right about that. Chuck, always a pleasure. Thank you so very much. Chuck Camillo there. He is the president and CEO at Essex Financial, joining us from Essex, Connecticut, here on the Daybreak Asia podcast. Thanks for listening to today's episode of the Bloomberg Daybreak Asia Edition podcast. Each weekday, we look at the stories shaping markets, finance, and geopolitics in the Asia Pacific. You can find us on Apple, Spotify, the Bloomberg Podcast YouTube channel, or anywhere else you listen. Join us again tomorrow for insight on the market moves from Hong Kong to Singapore and Australia. I'm Doug Krisner, and this is Bloomberg.